So here's our GameStop saga. I begrudgingly watched some of it on the way home. This village idiot right here, Roaring Kitty, Keith Gill, 642,000 people were logged into his YouTube account, and his YouTube account gained over 200,000 subscribers overnight. Okay, and I'm dealing with 830 subscribers on my channel. I think I should have 200,000 subscribers opposed to this Roaring Kitty Keith Gill, right? So let's talk about it. Let's really make this clear to you guys, because there's so much FUD going on about GameStop. I was reading some tweets yesterday. There are a lot of morons out there, I decided, that they claim themselves to be financial people. And their explanations are so sideways, so much bullshit in there that let me explain how this is going to work out. So Keith Gill, who's Roaring Kitty, his social is known in the social media as Roaring Kitty. He did this again in 2000. By the way, he's not a dumb guy. He was an analyst for Mass Mutual for a while. I'm pretty sure he quit that job after he made multiple millions on the first GameStop saga. So what happened is that last Sunday, he tweeted out before the market opened that he has a position of 5 million shares of GameStop stock, okay, that he paid $20 for. That's $100 million right there. I don't know where he got that money, because on the first GameStop saga in 2021, he didn't make that kind of money. So I'm not going to say he has a backer or no backer or whatever. That's not my problem. The thing that blew my mind was that not only he was long 5 million shares of GameStop, the stock itself, which is 100 million. So if you margin it, you need 50 million fully to fund that purchase. Or, because he's shown his account, he showed his position in the account. He's with Interactive Brokers. Interactive Brokers is not going to lend him more than 50%. I mean, there are outfits out there that will lend you 6-1, 8-1. But let's just say he had the 50 million to buy 5 million shares with full margin. Okay. And the thing that blew my mind was that, we talk about call options, right? Okay. He declared a position of 120,000 call options. Okay. Now, you guys have to understand this. If you guys are reading your books, you know that each call option is worth 100 shares. Okay. Represents 100 shares. So 120,000 of the regular June 21 expiration, $20 strike price call options he owns. And he said he bought them on an average price of $5.56 or $5.68. Okay. So let's do the math on that. Okay. So 120,000 call options are equal to 12 million shares of GameStop. Now, there's a lot of idiots out there like him who go, oh, what if he exercises? There's going to be a short squeeze. There's going to be this. There's going to be that. For all the village idiots out there, you guys should be watching me a little bit more, or do your homework before you open your mouths and sound really stupid. There are 327 million shares outstanding in GameStop. They've been issuing shares nonstop. Okay. That's the float. That's the outstanding shares. The float is 272 million shares. Okay. At today's price, let's say, I don't know what it is now, probably 27, 28-ish. At today's price, GameStop company, which is bleeding cash every quarter, losing money, hand over fist, okay, have not made money for a while. The company, let's say the stock is $30 a share, and the float is, outstanding shares are 320 million. Okay, what is that? Figure that out. That's close to $10 billion market capitalization for a company that's bleeding cash every single quarter. Okay, and this village idiot comes out and says, between the stock of 5 million shares and the 120,000 call options that he owns. By the way, these call options are going to expire June 21st, which is 2 Fridays from today. Okay. He bought the regular expiration. Those 120,000 call options not only represent 12 million shares, he paid an average price of $5.68 for those. I just looked it up. $5.68 times 12 million shares that it represents. He needed in cash, you can now margin options. In cash, he needed $65 million in cash to fund that purchase. And it was clear as day, by the way. Somebody was loading up on those. I could see it on my alert ticker because the open interest on the options kept going up. He accumulated 120,000 of those options, right? So a lot of the FUD on the internet is, oh, what if he exercises? Who gives a shit if he exercises and his uncle does it too? There is 300 million shares outstanding. So if he does exercise with his 5 million long shares equity, and if he exercises, that's under the assumption that the stock is above 20 on the third Friday of June. He will own 17 million shares. Now, when you exercise an option, because the reason you're buying a call option is you have the right to purchase the stock at $20 a share from somebody. That's why you buy a call option. You put up a little bit of money, and then you're going to put up the bulk of it when you exercise and you buy the shares. So 12 million shares at $20 will cost them $240 million to come up with to buy these shares. Just like it cost him 100 million on the first 5 million shares equity that he bought at 20. That's 100 million. So 240 million. Does he have that kind of money? I don't know. Does he have a backer as a hedge fund? I don't know. But the problem is that, those are not the issues. The issues is the misinformation that's going around the internet. Now, let's give it a little bit of a color on what this guy went through yesterday and today. The second he announced that on Sunday on Twitter, Monday, the stock opened at 40. Okay. And then it meandered a little bit. And yesterday, after hours, actually during market hours yesterday, he announced that he was going to hold a live stream. Right. Once that happened, stock took off some more. Right. And in after hours, I watched it hit 65. 65. Right. So everybody's getting ready for his live stream, what he's going to say. He calls it YOLO moment. He says it himself. It's not financial advice. Don't follow me. I'm an idiot. He said it many times on the live stream today. And then I was reading some of the chat, Dumb and Dumber came to mind, that movie. People going, oh, GameStop's going to 150, GameStop going to 500. I'm going like, you people are just going to lose money and become bag holders of second time around. But the point is, there's so much misinformation out there, and people don't understand options. People don't understand markets, and they just make commentary, and it makes me laugh. And I'm not the one to correct them. The market corrected it anyway. So then, story, got more interesting. Dave Portnoy, who is, I think Barstool Sports, is another degenerate gambler. He gambles, on football games and stuff, which is fine. Whatever floats your boat. He got on the bandwagon yesterday. And then on the other side of the story, Andrew Left, who's a famed short seller, he goes like, the second this guy opened his mouth, I started shorting the stock. But then, if he shorted it in the 40s and he was taking a ride to 65, I'm kind of saying that the company actually absolutely kneecapped these people. Okay. I was actually expecting the stock to open at 80 to 100 this morning. Unfortunately, GameStop's earnings were not until next Tuesday, and they early released their earnings. They lost their ass. They lost a shit ton of money. But besides that, they said, we're going to potentially issue 75 million more shares, diluting the existing shareholders. The second that news came out, it completely negated Roaring Kitty's, live stream. It ruined it. And look, I'm going to give you the numbers. This may shock you guys. And I don't know how that guy showed up to the live stream, but he did. He's still holding on to this original position, 5 million shares and 120,000 call options. If the stock, however, is $20 or less, okay, third Friday of June, and he does not exercise before then, for which he needs $240 million, let's say he goes 50% margin, he needs at least $120 million. And he's doing this with the rinky-dink interactive brokers. You guys would think he'd be doing it with Goldman Sachs or some other company that has more availability for him. But anyway, but then, you know, he is the people's man, right? And he's just an icon to a lot of people. And so at 60, let's say, forget 65, make it round numbers, okay? He bought those options that are $5.68, okay? At 60, those options were worth $45 to $47 a piece. Think about this. Now take 47 or $4,700 because it's 100 shares, right? $4,700 times 120,000. You guys have calculators out there. Let's see how much he was worth, that option position alone. Let's see. 100 and yeah, it's unbelievable. 120,000 times 4,700. His option position alone for those 120,000 calls was worth $564 million at last night's close at 60 bucks. So he paid 65 million more for it. He was up $500 million unrealized profit. Okay. Now let's take his stock position, which is easier to calculate. He was long 5 million shares at 20. Stock is at 60. That's another 200 million. So he was up on paper $700 million at 5 p.m. Pacific time last night. Right now, he's still up on the position, by the way. Stock is, I think, is 28. I will check it. I will talk about it. Let's say stock is at 30, right? So his 5 million long shares are worth 150 million. So he's up still 10 points, which is 50 million. And the options that he bought at 568 or 550, let's say, are probably worth about 15 and a half. So it's still up $10 there. So it's still up another 120 million. So overall, on paper, he's still up about 170 million. But to go from zero to up 700 million back to 170 million. Again, 170 million is immense amount of money. Nobody's making fun of this guy. But then the live stream, the gist of the live stream was he believes in the fundamentals of the company while the company issued horrible earnings today. And then they said, yeah, we're going to dilute more. We're going to issue 75, potentially 75 million more shares, right? And I'm going like, okay, let's see where GameStop is. Let's see what's happening. And I can't fathom being up. When I'm up $70,000 as opposed to $700 million on a single position, you guys know what's going to happen to that position? Huh? That's going to get trimmed. But let me explain a little bit about also his followers, okay? His followers are average people who has no clue, who have no business in being in options or the stock market. From the comments, I could see that this morning and yesterday. Comments are flying. Look, his live stream was supposed to go live at 9 a.m. It didn't go until 10 a.m. 642,000 bag holders were watching it. And the second he opened his mouth, people were like, oh my God, is this the guru that I'm following? Right? You guys should go watch it. It's on Roaring Kitty YouTube channel. Go watch the live stream. It's there. You guys make up your own mind. And, you know, he says it clearly. It's a YOLO trade. You only live once trade. That's his style. That's the way he trades. And I'm going like, that's going to take you to the poorhouse. And I'm very sorry for all the 600s or millions of people who last night were thinking of buying. They're in the poorhouse because all the zero DT options that I talked about, zero data expiration options that they were all loading up onto creating the gamma squeeze in GameStop ended very badly, right? It all expired worthless today. The market makers came ahead. The shorts are coming ahead. But again, I don't feel bad for Keith Gill. I think he made quite a bit of money on the first run. But here's the deal. Wall Street is very, 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 very smart, okay? There was a huge difference between what happened last time and this time on GameStop, okay? Last time, the market makers were selling these options, these zero DTE options, or short-term weekly expiration options to these YOLOs with not enough premium, not enough implied volatility. The second GameStop started moving, they moved, which I'm going to show you the option chain on GameStop. They moved, the market makers move implied volatility to over 500% on these things. So even if the stock moved your direction, you're not going to make money. Well, you will a little bit, but not like before, right? And the seller of the options, called selling the premium, absolutely came, made killing on these things, right? And so I feel very bad for the average person who lost his ass. And that's how the ended. And what do we call? Game over, not GameStop. So let me add my screen to okay, hope you guys can see this. All right, so here we are. This is GameStop. Right now it's $27.28. Let's put it up. Here's GameStop. This is the daily action. Well, this is the intraday action. If you guys can see it, this is the daily action on GameStop. I mean, look at these moves, right? I mean, is there money to be made here in these 2 days? Absolutely. Because what happened is that stock was like meandering at 10, and then the news came out. His first tweet went to 15, went sideways, and then it just took off, right? First time it went to 65, then crashed to 17. I mean, imagine if you're buying calls going, if you bought calls at 25, 30, 35, 40 and stock is 65, you're making fortunes. But then the problem with these guys is that they have the diamond hands, right? They talk about diamond hands. They go, I'm going to hold it forever until it goes to 500. Sirs, madams, things don't work out like that on Wall Street. Anyway, and for all the yahoos out there who says, oh, what if he exercises? Do you guys see the average trading volume when these things were happening on the stock? This is a single day trading volume. Let me quote it for you guys. On May 13th, the volume was 187 million shares in a single day. May 14th, 206 million. Yesterday, 207 million. Today, already at 11:30, 248 million shares. So 12 million is nothing compared to that. And yesterday, by the way, the stock equaled the high in after hours at 65. Did I get involved? No, I don't need it. I'm just trying to hold my shit together without this gambling attitude that everybody has. Again, to finish this story, a lot of people lost their ass, and GameStop is a dead company, dead as a doornail, with no future, unless the management that screwed everybody today, screwed, including Roaring Kitty. And actually, you know what? I'm interested, actually, quite interested. Let's look at Roaring Kitty's position. So he has 5 million shares. Stock is at 28. So he's up $40 million on his stock. Okay. And look at those calls. Let's look at his June 21 calls that he paid $5.68 for each. And these are the regular expiration June 20 calls. Well, let me see. The June 20 calls right now are trading at $10. Okay. And let me give you guys the historical value on June 20 calls. I don't know what to say, man. This call yesterday was worth $45. Today is at worth 10, and he paid $5.68. So 120,000. He's up about 4.5. So he's up another 50 million at this price, at $28 a share. Okay, so he's up about $100 million. But when he went to bed last night, he was up about $700 million. My projection for the stock is it's going to go right back to 20. Hopefully, for his sake, it's not it's not by by the 21st. Hopefully, it's above 20. So maybe he's going to exercise, and if he does exercise, he will own, and under the assumption that he has 120 million or 240 million dollars to buy all those shares, he will be owner of 6.7% of Game Over stock. Okay, I mean, maybe he does. I don't know. Time will tell, but that's not my concern. My concern was for all the people who lost their ass, and I feel very, 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 very bad about it. Very bad about it.